Hi and welcome to another edition of TraderCast's weekly market report. This week, from the economic calendar point of view, on Tuesday, 15th of December, we will get a US Consumer Price Index CPI. On Wednesday, 16th of December, all eyes will be on a non-monetary policy ECB meeting and CPI reading for the Eurozone, and obviously at 7 o'clock GMT time, a Fed interest rate decision, anticipated meeting, and in particular 30 minutes later at 7:30 in the afternoon, or 19:30 GMT time, Fed monetary policy statement and the press conference. So these events are going to be the highlights of the economic calendar, and everything else will be just dwarfed with these events, and in particular Wednesday evening. So be prudent and protect your positions, especially on Wednesday. So let's go into charts and try and cover a few financial instruments. So I'll cover probably about 4 or 5 instruments in a very short period of time. So I'll do this very, very quickly. Euro dollar, guys. We're seeing a counter trend trade. Anticipations are that Fed will raise rates on Wednesday. That would lead us to believe that dollar will strengthen, and but what we saw here, we saw a counter trend reaction in euro dollar as regards to a disappointment by ECB's, a lack of action, or a market anticipated cut in deposit rates. So euro dollar actually went up higher, so stronger euro, weaker US dollar. But anyway, the levels that we are keeping an eye on are fairly straightforward. Euro is currently creating this sequence of slightly higher highs and higher lows. It's supported by 20, 50 and 200 period moving average in 4-hourly time frame. The logical point of control or a point of interest is at 1.1030. Continuous and confirmed breakout above that level would potentially target further upside resistance towards 1.1090, followed by 1.1150, and then ultimately most of the bullish traders are keeping an eye on this 112 area. The other alternative is if we see a rejection at this 110 zone and a quick pullback and the retest of this rising trend line, and a challenge to this support down here at 109.26, 109, only a confirmed loss and the red candle closing below that zone would potentially indicate further weakness, and in that case target further downside support towards 0858, 0860, followed by 0810. Cable, very similar story. Massive resistance here at 1.5250, followed by 1.5270. That zone here is a hugely important resistance. It's referencing a trend line and some previous highs in end of day and even weekly timeframes. So confirmed breakout above that zone would confirm the existence of this bullish uptrend in 4-hourly time frame, and then target further upside resistance towards 153.10, followed by 153.35, even 154. The other alternative is spike into that zone, and rejection at that level would open up the way for the retest of further downside support towards these previous highs at 151.80. Only a loss of that 151.80 would open up the way for the retest of 151, followed by 150.75, followed by 150.35. S&P, guys, in 4-hourly time frame, massive selling pressure on Friday. Bears are in control currently. A little bit of uncertainty with the markets, what's happening with the Fed, and will they raise rates, or how will market participants react to what's already been priced in and anticipated. Levels to watch are fairly straightforward. 2020 is hugely important point of control and point of interest zone. If we see an oversold bounce back that creates some kind of continuation pattern, maybe a flag or pennant or a rising wedge up here on Monday, and a breakout above this 2020 zone, confirmed breakout in your chosen time frame, would open up the way for the oversold bounce back and potentially target these further upside resistances towards 2036, 2052, 2070. Bear it in mind, the 4-hourly, hourly, daily are all pointing to a bearish. Price action is capped below this 20, 50 and 200 period moving averages. It's creating lower highs and lower lows. So oversold bounce backs and maybe a rejection at 2020 or a dip below these current lows could potentially target further downside support towards 2005, 2005, followed by 1990, followed by even 1970, 1972 on the downside, and that would be ultimately very bearish outcome. DAX, this is Germany 30, guys. DAX, yet again, substantial selling pressure in DAX. Price action is capped by this 20, 50 and 200 period moving averages in 4-hourly time frame. So end of day is downtrending 4-hourly, as downtrending hourly is downtrending. So for anybody who's trading intraday, the logical point of reference is either this falling resistance trend line or this previous low at 10,442, so 10,440. A spike into that zone and rejection would confirm the existence of this downtrend and then open up the way for the retest of this further downside supports towards 10,086. There is actually 10,100, sorry, 10,186, 10,170, even 10,100 comes in play. Below 10,100, 10,052, 10,052. Only a confirmed loss of this last level, 10,050, would potentially open up the way for the retest of further downside towards 9,900, 9,850 zone, and that would be ultimately extremely bearish outcome for DAX. So the other outcome is a spike into this zone, 10,440, and a confirmed breakout would create a short squeeze, and then further upside resistance would be found towards 10,600, followed by 10,700, 10,760. The last thing that I want to cover now is gold. This is a 4-hourly time frame gold. Yet again, very similar to euro. Gold was under pressure, stronger dollar. Gold was under pressure, and then we saw this spike as a result of ECB, and then this retest from above of that previously fairly embedded and very, very strong resistance trend line. So as long as the price for gold stays above 10,072, which is our point of control, potentially we could see a further upside move to retest this further resistances towards 10,085, 10,089, 10,093, and these would be some heavy resistances and probably be seen as a decent profit-taking zones for anybody who is sitting in a bullish camp. The other alternative is a pullback into this 1072 and confirmed loss of 1072 as a result of stronger dollar. So dollar strength potentially indicates gold weakness, would target further downside support and negate this breakout towards with a pullback towards 10,065, 10,058, 10,052. I was trying to do as much as I can in a short period of time, so hopefully you enjoy this and you're finding this beneficial. If you're not a member, come and give us a try. 15-day free access trial period at tradercast.com. If you're an existing member, talk to you on Monday during the live broadcast midday. Thanks for listening and enjoy.